Hey guys, how are you? Yes, an equity for once, an equity indeed. Let's have a look at it. So we are having a look at Winstream Holdings. Winstream Holdings, yes. So why is this one particularly interesting? Well, I'll tell you why. The guys in my community, a combination of Sam and Ken, had done some great work on their equities here. And it was a really interesting narrative, and it highlights how HVF method is a forensic detective for all things in the market, a bit of an insider spotter, and a number of other things. Clearly there was a problem at Winstream. So for those of you that wouldn't know, and I certainly didn't know until I checked in with some of the things the community was on. I remember looking at the pattern at the time on this pattern view. This is our premium area view, by the way. So to be clear, tomorrow doing a webinar with an offer at the end, an informative webinar, the ability to short, the ability to defend your capital as well as to go long, the need for method, markets, the recovery ladder, all the things you might need to know, totally free. You need to go to the marketsniper.com to register. It's real easy. So you go marketsniper.com to register, and you hit the register button, and you'll be able to jump on for that free webinar. And there will be an offer for those that are serious about learning more about trading, but there's no obligation, of course, and trading isn't actually for everybody. But anyway, going back to Winstream, this particular equity was listed. That was the market slide. It eventually came. Isn't that fun? You're trying to show the website, it just doesn't come. I'm on a hotel Wi-Fi at the moment. That's why it's like sleeping. But let's carry on with the clip. So we're looking at the premium area where we do a lot of our setups and our work, and we do number of time frames, number of different kinds of analysis, and this is where it is. And this is equities that we're discussing for a while, something a bit different. So you can see structure of failure on the bigger time frames, and I'll show you that. It was, I think, Ken who put this up on behalf of Sam. So this is on the weekly time frame. This has been a bleed out. There's been problems in the hood. This is dropping down to a 4-hourly. Lots of setups making targets. Note how one setup is generated and winds up at the targets of the previous setup, and the second interim is kind of the limit after the rally. You get a gap through. Each time short, a profit take, and overperformance rally, new wind up. So that was a good one, and of course the previous one was a huge one because it's on a weekly time frame. Note also the rising wedge rally at the second interim, which is typical, the points where you get pushback. How many of you guys have a trading method that gives you this kind of risk reward, the distance between the green and the red line to the fat purple line, and will even give you an idea when it'll move against you after it's made some progress in your favor? Boom, 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 and rally. It's absolutely not very many for which that happens. So that was a very decent pattern view for the next structure that was occurring, and as a result it was rolling over. It was a little foxy, this. It was still a little foxy even though it was in great form. But this is to show you how it all ended up in the end. So in fact, let's go straight to snag it. That was the setup. Kind of had a deeper low here. We had to do almost, I've done a retrospective tool, not involved in this trade, not claiming it. This is just about the method being utilized, and a couple of the students that were engaged on this and had drawn it, and had followed some of the other trades progress earlier. Good breakdown. In the end, it ended up with a fatter funnel than you might have drawn at the first instance. So that's why it was a bit trickier, because it had this exhaustive up move just before it eventually started to die. Die, target run, rally. By the way, once it rallied, you would have thought that's it, done. If you weren't holding on for overperformance, you would have thought that's it. It's actually forming a little bit of a thing for a structure to push back up again now that it's made target. What ended up happening? Boom, major announcement, lawsuits. Here's the narrative for you to follow the actual news. And this is why I say the news always comes after the trade. The trade comes first. The news always comes after the trade. The trade comes first. So what have you had? Rural telecom company Winstream Holdings announced Monday that it filed for Chapter 11 after being hit with a $310 million judgment in a legal loss to a capital management firm. So it got sued into disexistence. That's your litigation society right there, friends. Who knows? Maybe they deserved it. I haven't got the whole gist of it, but they filed for bankruptcy. That is a huge award for a judge to give. So you'd have to think think they did something that merited it, accused the company of violating its bond covenant when it spun off its copper wire and fiber cable business into a new company, Unity Group. So maybe it was asset stripping the good and leaving the crap behind. Who knows? But somebody got pretty upset, the bondholder, and he's now pushed it into bankruptcy. So those bonds won't be doing so well. That is the nature of things. But this is business, and this is what goes on. And the key thing is the charts will show it to you first, and having a method where you're recognizing it and also recognizing that it's not about the trying to call bottoms. You've got to stay with the primary move. Stay with the primary move, as was illustrated in this set of charts. On the weekly charts, right up top there, you had $115. Then you had that spike out rally. Since then, down, down, down. Trend is your friend. You think it can't go any lower, keep buying the lows. It's not a low until it's retrospectively proven to be a low. It's just another low point in a death. That is, the trend is your friend. Stay with that. And also having a method whereby you can pick off the various setups that this equity, people say, oh, there's a scarcity of HVF setups. Well, we're just showing you a few right here that have occurred in a company that traded all the way down to filing for bankruptcy. Fascinating, and the narrative always follows. But the key thing is the trade comes first. The news follows in retrospect. There would have been some awareness that there was obviously a legal case and they weren't in a strong position. I'm sure that was the case. But the key point is many people think, yeah, they'll shrug it off, they'll win the case, or they'll only have to pay a small amount, or whatever the case may be. And in the end, it turned out quite fatal for this company. Anyway, so don't forget the webinar. Just a quick check-in. Haven't done anything on equities for a while. We had the S&P sell off and make the HVF method target of Head and Shoulders, a unique way of doing that. You can find out more about it. And since then, it's been in a snapback rally, and it's been in quite low volatility snapback rally. So if I just run past a quick check-in of the equities for everyone, and when it's in a low volatility snapback rally, it's got the potential to go a lot longer than people expect. So is it the crash of all crashes? Right now, it's not looking like it. It's looking like another one of those index events where it has a proper letting off of steam and then they reheat. And you've got to remember, guys, the Fed literally did an 180-degree roundabout turn on its interest rate policy on account of this. Let me shut some browsers. I'm taxing the hotel Wi-Fi there. That's the Market Sniper. Go to the Get Started button, by the way. That's where it is for your webinar. Let me close that and close one of the looms. We were doing looms for the premium guys and check-ins. So yeah, so let's get the SPY up and see if we've got a chart. Will it load? Will it load? We're back with the S&P that I was just mentioning. Took a while to load. I'm on hotel Wi-Fi, so it's been a bit skippy. So this has been a sustained rally. It is going slightly convex. There is scope for rising wedges, but I will point out that, and of course it did meet this key resistance level that runs across here. So eventually you get some rising wedges, but these rising wedges can in fact pop out the top first. In other words, you can't feel comfortable. So overall equities are actually quite stable since the Fed did their U-turn. Yes, there's a bit of potential rising wedge structure that at some point might lead to a little bit of steam being taken out. But when you have these low volatility climbs, they can go for a long, long period. This was the key level of significance. So I'll just throw in a quick bit of equity analysis. You are getting at that point where you were resisting a number of times. You popped above it, you gapped above it, and then you came back above it. So is this going to be a point of pause for a while? The low volatility nature, we got a little wind up for a pop up there. We saw that, and I called bull on that at the time for the guys. It was we were all looking to see if we were going to get individual equities that were going to be shorts, saying nope, the God market, the strongest market that dominates whether money is flowing into equities or not, was setting up for a push up, and that's exactly what happened. So having made our HVF method downside, equities as a whole have been re-inflating back up. For those of you that wonder, what target did you make? What's this you're claiming? This was our draw for the downside, and there's a certain reason that I won't get into here. You'll learn all about it on a program, and you can come and get the free webinar and learn more about it. And there is a self-study option, which is at a lower cost point if it's of interest to you. But remember, trading isn't for everybody. You've got to really be prepared to own your own outcomes. It can get emotional at times, it can be tricky, but it's very rewarding when it's right. So that gave us a HVF method target that we project for reasons that you'll find out in greater detail, as I say, if you choose to invest further in your learning. But that gave us the low virtually of the down move. And whilst it might have continued if we'd gone full reset, the combination of the Fed's change of heart and U-turn, which was predicted by us in our Reset Sniper channel, saying there's 34 months since they first started increasing the rates, and they sure as hell are going to feel it. And then normally you go into a recession if you continue during that. It's kind of statistics, and we sure as hell got it. So that was October that we were 34 months in, and boom, there she was, and they were still talking tough. Next thing you know, we wet the bed, and that was the target run over there. And since then, you've had a snapback rally, and that is clearly a point of technical interest. So we are at that level now. So it is interesting. But that said, there's no violence. This was skippy and highly volatile. There's not that same degree out there at the moment in terms of this. So maybe a small pullback. I think you could even be going through this. For it's not beyond the realms of possibility that you could be making new highs. I kid you not. Not in a positive sense because the economy is awesome, but because the benign interest rate environment is as it is. But that said, having tapped out at this level, it's an important level also to keep in mind. Let's throw him in there, and then having this as a high, there's some big levels that have to be contemplated here. But for now, low volatility. Look at this, how you ground higher and higher and higher and higher. This can grind up a while, but it is a broken system. Anyway, see you on the webinar, guys. Hope you enjoyed that on Win, and that's a quick update on the S&P and how I traded to an HVF method downside. We'll catch you if it's of interest, and otherwise just play safe out there. Don't be buying the hoopla. I can't bring it in myself to go long on equities, which is why I'm looking in at other markets, but I would trade short. But it's going to be the toughest game in town to get right on the indices. But when eventually it occurs for the big run, apart from moves like this, to get the big short, it will be probably the biggest thing we have yet to see in markets. I would expect probably after the re-election of Trump in the second term, or in and around that period. Okay, bye for now.